The third wave of the big bang merger is here. In an effort to boost liquidity in the economy and bring about banking reforms, the finance minister announced a merger of 10 PSU banks into 4. PNB, OBC, United Bank of India will be merged. Another round of consolidation would involve Canara Bank and Syndicate. A third one would be the merger of Union Bank, Andhra Bank and Corporation Bank. And finally, the fourth merger, Indian Bank and Allahabad Bank. Rajeev Kumar, Finance Secretary, speaks to ET now on the same.
If you look at the entire landscape in the financial institution sector, there were various issues, as you are aware, in the past. Be it banks, be it private sector banks, be it public sector banks, be it rating agencies, be it auditors, be it all lots of things, be it NBFCs, be it HFCs. So, in last 4 or 5 years, there are a number of steps which have been taken, which were shown in the slides. You can take it from the presentation, that a very strong, clean, responsible behavior is setting in. All stakeholders have to be responsible, be it creditor, debtor, rating agencies, auditors, everybody, board members, boards, senior management, everyone. So number one, we were cleaning it up for last 3-4 years continuously, 5 years. Having cleaned them up, you saw that every bank now, there were record recoveries, there is record level of provisioning, there is also record level of resolution which is happening. There is also everyone now, out of all 18 prior to today, even now they are 18, 14 are in profits in the last quarter. Having laid that strong foundation, now there is a time to leap forward. What is the leap forward? This is basically you're looking for banks with heft, with size, so that you gain now the benefits of efficiency. Efficiency comes from common procurements, common systems. If you are a big bank, then you can invest in technology. Then you can really partner with fintechs. Then you can work from the position of strength. And therefore, what is required? There was required a scale and a size. So we have created today 6 banks which are absolutely fine, robust. We have shown you their figures, their capital adequacy norms. We have shown you almost all are above or near 10.875, which is the CRAR. All of them are by and large above 7. CET1, which is also 1% higher, you must remember, than the Basel norm. So we are maintaining more than the Basel norms. And then they are also well provisioned. Having done that, we have combined them. So 2 we have left for a national space, national pan-India approach, and 4 we have left with a strong regional connect. Therefore, the entire consolidation process is complete. Now with certainty they can work. And the rationale behind was that they should be on the same platform so that there is no disruption and discomfort to the customer. That is number one. Number two, they increase in their size. Somebody gets CASA, somebody gets the entire credit portfolio. So that's what is the thing.
Absolutely, sir. But you know, the bigger question, and this is what everybody has been asking for, whosoever has been looking at the banking space for a very long time. Does it mean goodbye to the good old market-oriented reforms? Because it is the government that is pushing the bank boards to look at this merger. And what kind of, because we should really be looking at commercial considerations. What were the commercial considerations with respect to the merger and the amalgamation that we are pretty much looking at?
Very right question. So who decides and what are the commercial considerations? The commercial considerations derive out of the efficiency gains which they are going to have it. We mentioned today about the Bank of Baroda, Vijay and Dena. So first advantage was that the Dena Bank customers started getting credit because they came out of the PCA. Then all their advantages were in terms of the efficiencies through operations, through verticals which they have created. Whole lot of churning is going on there. The CGM positions created, the verticals created. Large number of reforms taken earlier where the ED's positions have been increased to 4. One being dedicated to the technology, risk officers coming from outside. So you are simultaneously saying not only grow, not only give credit, but also at the same time, very robust way, look at the risks, look at the product mix, look at the loan book mix, corporate, retail, MSMEs. So there are strong commercial viability and competence and compatibility compatibility concerns and the same platform which have gone into it. And as you said about boards, we were in consultation with the banks, all stakeholders. We were doing it for last 4-5 months. And then we were waiting for the time when they are robust. There's no point doing the merger just for the sake of merger. You combine the weak with the strong and pull down the strong also, that's not the reason. Since you are going to create them for to support the needs, credit needs of an aspirational India, therefore, you are waiting for the time. And now the boards will take the call. They will consider. The decision is governments being the owner to ask the boards independently to consider this proposal. Whatever they consider, whatever suggestions they sent us, they will all be factored in.
Okay. So since you're saying that if, whatever suggestions that will come in, the government is going to factor in, I want to understand from you, sir, some of the banks that will be amalgamated into a bigger banks, they have high NPAs. That also means that there will be stronger banks now which will be impacted by this, the fact that there will be an amalgamation and their NPAs too will see a rise. What happens in that case? How are you looking to kind of provide for those banks?
Very right. Please again take the bank-wise numbers of the amalgamating and the 3 entities or 2 entities. We have shown it in the chart. You can download it from the PIB website. There are 3 parameters. They should have a CRR ratio of 10.875 plus. They should have CET 7 plus, which is 1% higher than Basel, I told you. They should have NNPAs below 6%. All of them in the combined entity are close to that. C Syndicate and Kenara, they are all below this. C Indian and Allahabad, they are all meeting all requirements. So essentially that entire capital is going to go towards the growth. In PNB or in one or more, with the kind of capital which has been infused, only a very small portion would go towards maintaining those ratios and rest is all growth. So we have very well taken care while allocating the capital, which is tentative, which will consider the board recommendations because the boards will take a call and then tell us what exactly they need. But this exercise has taken into account very clearly that all of them in the combined entity on the effective date should remain compliant to all the regulatory norms and should have sufficient growth capital.
Right. Sir, from 27, we've seen 12 banks, out of which 6 will be the bigger banks that we are looking at. How will you, A, align them with global standards? And B, when you have, such big banks of, such big magnitude, how will you ensure that frauds do not happen? And also, they must, I'm sure, be very close to the too big to fail category. So are we over-dependent on these large banks?
Again, a very good question on 2 points. Too big to fail and then frauds. Why were frauds happening? They were happening because of the appraisals, because of the non-separation of the roles, because of the non-specialized monitoring of the large value loans. All that you saw in the chart, again you please take it from the website. There are 28, 29 actions which have been shown. And it is only after taking those actions, it's not premature. It is after you have put everything in place through those reforms that you have gone forward. And then, on the too big to fail, we are already 1% plus Basel. Plus, for the large banks, 0.25% for domestically important banks is also inbuilt into it. So they will not only maintain regulatory capital, which is 1% higher, they will also maintain 0.25% extra. So, the government is there. Government has repeatedly conveyed that the public sector banks are the one because you go to the rural areas, you go to the small towns, you go to inhabited, inaccessible areas. It's their reach. It's their reach. And when you are diverting the attention towards the financial inclusion, you have to have the size and reach that you can cater to everybody. We are aspiring to have account for every adult of the country. Right. We are already almost there. All families are covered. So we are having mudra, we are having all kinds of products, social security. So it will all reach through them. Whereas they will also get, you said, aligned to the international standard. They are 1% higher, I told you. So they have the heft now. They will deal from the position of strength.
So banks have been nudged for the last couple of months, in order to transmit rates, to, provide higher credit to the economy. I want to understand from you that is there a demand problem that, there are not enough people who are taking the loans, or is it the problem with the banks? What has been your assessment? Being in the government, you've been announcing one measure after the other. Where does the problem really lie? Because the RBI yesterday in its report also mentioned that these are cyclical issues, but if it persists for very long, the RBI has said that it is kind of pretty difficult to ascertain that where are the worries really coming in from.
See, the transmission has to happen according to the MCLR linked processes and also according to the repo linked processes. So there is no nudging at all. This is only we talk to them, and it's their duty to be efficient. Efficient in the sense, you see, the MCLR is linked on the basis of what? The cost of deposits you have. Approximately 60% deposit comes from where? It comes from the fixed tenure terms, so which you cannot change in between. So there is a time gap in transmitting the loan. So what is the solution? Solution is also simultaneously give option to the customers that you have a repo linked rate. So announcements, now the challenge before the boards, before us, is to whatever we announced, we stick to it. We provide credibility to what we are saying, and we show that it happens. And therefore, you also must remember that in the first presentation, we said we'll present a report card to the nation, right. And we did it. And if you look at those parameters which are being judged on that report card to nation, how can they go bad? Because every year we'll present you a report saying who did what. You will ask us questions as to why they have not done it.
Sir, in terms of governance reforms, a lot has been done. You are empowering the boards in a big way. What more can we, expect in terms of governance reforms? Are there more in the offing? Because the PJ Nayak committee also had suggested a slew of reforms, or has the government pretty much taken and done everything that was recommended as a part of that report?
If you look at the entire matrix today, it is not only consolidation, it is capitalization, and it is also governance reforms. And governance reforms have a direction. Their direction is what? Make the boards independent. Transfer from government as much power as possible. Make DFS as redundant as possible for the banks. Empower their boards. Appointments outside the DFS. I don't have any role. This is on merit, come preference they give. And we announce the results. Bank Board Bureau announced the results same day. And in that RBI sits, the Bank Board Bureau independent member sits. So it's not easy to transfer your powers, but you have to make them professionally run. That's the biggest thing. And therefore, most of it we have done. If there is anything remaining, it's an evolving process. The direction is to make it a board-governed entity.
So my two last questions, and I know my other colleagues have also been waiting. Firstly, on the recapitalization amount, 55,000 crores is what you've promised right now. Help us understand, is this growth capital? How soon, will this money really be put into the banks? And also, what happens to the remaining 15,000 crore odd rupees?
Please download the fundamentals. Most of them are there. Therefore, what will they use it for? Little bit for regulatory if required. Otherwise, it's all for growth. It's both regulatory requirement and growth. But fundamentals will show you that it's very minimal required there. As far as releasing it, it should not take more than 7 days to 10 days or a 15 days period. This will all get released. And the remaining 55 is, as I mentioned, once the board considers, they will give us their suggestions. So if there is a minor adjustment to take place there, but it's in the range of that. We have made that assessment. But still, we'll be open to respect the board's decisions and take it.
My last question to you, sir, on the RBI approvals. At what stage will RBI be consulted? An initial level of consultation has already happened with the RBI, but where from here? How soon, in terms of timeline, can we expect the mergers and the synergies to really come into place?
The process is like this, that after the alternate mechanisms decision, the announcement is made, boards are requested to give their views. They will give back to us. We'll analyze it. After compiling it, we will send it to RBI for formal consultation. Once the consultation is received, the scheme of amalgamation will be made. That will again be sent to RBI because there is a two-stage consultation. Then after it is finalized, then the AM will take the final decision. So the date of effective date will be decided within a short time, but it will have 7-8 months time minimum, 6 months time, as it happened in the case of Bank of Baroda.
That's Finance Secretary Rajeev Kumar giving his reaction post that big banking merger. First on ET, now speaking about how it was the need of the hour to scale up Indian banks, and of course talking about the entire credit boost as well that they have given banks in the form of the recapitalization.